It's good.
That's it. I'm here.
Well, I think that we could probably get started, and if somebody shows up in the next couple of minutes, we can, I'll just let them in. Um, so, good afternoon, everyone. My name is Jessica Rorison, and I'm working with IBDS and Sage Hill Community Futures to offer this virtual training session with Jenny Glessman, who is a staff member over at Sage Hill. And today we're going to be talking about small business cash flow. Before we get started, I just want to acknowledge that we are coming to you from Treaty 6 territory and homeland of the Métis. We pay our respects to the First Nations and Métis ancestors of this place. So that being said, I'm just going to pass it over to Jenny. But finally, one final thing is that there is a survey that will pop up after the presentation. And if you could offer your suggestions as to any future training that you would like to see, that would be great. As we're just in the middle of trying to finalize our next fiscal year for this program. And we do offer virtual training twice a month during kind of the working months, so not during the summer. So anyways, that being said, thank you again for being here, and on to you, Jenny.
Welcome, everyone. On behalf of Sage Hill and myself, I'm glad to see everybody here. I'm the office coordinator here at Sage Hill, and my job is to work with all the new entrepreneurs that come in, lots of times with their business plan and their cash flows. So a lot of the knowledge I have is from working firsthand with the entrepreneurs as they start their journey. And unfortunately, fortunately, one of the things that we always ask them is, do they have a business plan and projections? And everybody always looks at me like deer in headlights. So I hope today I can help maybe clear up some of that. And please feel free to stop as we go and use the chat or unmute and ask questions as we go. Because this whole thing of projections, I guess I'd start. We're doing cash flow today, and the reason we're talking about cash flow, I guess first of all, I'm going to tell you what a cash flow statement is. It's how the cash moves in and out of your business, and why it's so important is, firstly, if you're looking for financing, a cash flow statement will show the bank or a credit union or a community futures office. How you make your money and how it flows in and out, and if you have the ability to make your payments. Um, it also is very good as a business owner. Lots of times I always say, please don't do your business plan and your cash flow and stick it away on a shelf and never look at it, because it also becomes that roadmap and your map to look at and see how you're doing. So as a business owner, it helps you make your financial decisions. It helps you monitor your liquidity or your how much cash you have on hand, and it also will maybe help you avoid being cash poor or cash short. Lots of times we suggest, when someone's thinking about maybe a purchase, maybe more if you're an established business and say maybe you need a new piece of equipment. Sometimes if you look at your cash flow and when your money's coming in and out, you might be able to see when you actually could make that purchase and not make yourself cash poor, so that you can still keep making your payments. So that's a little bit, it is different than an income statement. Lots of times we get questions like, what is it? Lots of times it's the same information, but an income statement is things that you actually can expense. It shows you the income that you've come in and it shows your expenses. And the example I always like to give, the big difference on a cash flow statement, if you have a loan payment with a bank or a credit union or a community futures office, on a cash flow statement, you would show the principal and the interest. Whereas on your income and expense, you would only show the part that you expense, which is the interest. So the principal wouldn't be shown. So that would make a big difference in what cash is flowing in and out of your business if you don't show the payment. So that's a little bit of the difference between the two. So I'm going to start by sharing my screen. I've done up a little bit of a cash flow statement. Hopefully everybody can see that. So basically, this is one of the community futures offices we all use. It's split up into kind of like 3 sections, and it's also split up with a startup column. You'll see the startup column here. and then it's got 12 months. And the reason is lots of our businesses have highs and lows. We have, some of us may be seasonal. Maybe we're not open in the winter. So those months you wouldn't have much income coming in, maybe next to nothing. So then you would have zeros in there. It's broke up by the months, and it's broke up for startup, because today we're talking a lot about, getting started. So you might have expenses or some income that comes in at the beginning and you're before you're actually open. And so we'll touch on that a little bit more. So your three sections is your cash, the money that's coming in, your cost of goods, and we'll talk about that, and then what's flowing out, which is your expenses. So I always like to start um, with your cash in. And so that's your sales. What are you selling? So whether it be, are you a product business? Are you a service business? How are you charging for your products? And I always like to tell somebody, have some scrap paper, have some notes, because when you go to a finance, to a bank or a credit union or Sage or to Community Futures with your cash flow, they're going to ask you, how did you come up with this sales every month? And as a startup, if you're a startup, lots of times it's an educated guess. It's making educated guesses based on the research that you've done. And I'm going to go back to back to the business plan. You've made some decisions of what you're going to sell. So the example that I've kind of done up today is going to be a restaurant, a small coffee shop, and just so that you kind of get a feel for it. So a lot of times when I'm talking to an entrepreneur, I start with, and in this case, let's look at the startup column. So what I've done is I've said, you've got cash sales, and right now, I don't worry about the accounts receivable, collectible, and the GST. Those columns we actually could take out. This we want to just get to the actual nuts and bolts. So owner's investment. I'm going to say that this owner is going to put in $5,000. So you as an owner, start up front. Are you putting any cash in? Maybe you've got a building that you're putting in. Are you putting something in? So I'm just, for this example, $5,000. And I've decided I need to go out looking for a loan for $10,000. So that would be where you put your loan proceeds. And that's in the startup. Um, and then we'll work our way through. So then I've gone in and I've looked at my months. So you break it out, and I always say to somebody, start out simple. Decide how many days a week are you going to be open. If you're a retail store or a restaurant, how many days are you open? 7 days a week. What's your hours? And again, that should have been in your business plan. Talking about when you're describing your business, you would have said, so I decided when I started this morning, I'm running a little coffee shop. I'm open 5 days a week. So that's where I got it from. And I went 5 days a week. So there's 4 weeks in the month. So I've got 20 days, 20 days. And I think the first math I did was that I'm going to make $150 a day. So when you go 20 times 150, got me my $3,000. So, and that's where I say writing that down, so that when you go to sit down in front of whoever your lender is going to be, and they say, oh, this looks great, but how'd you get your sales numbers? You can open your book up and you can say, I decided this is my hours. I'm open this many days. I'm doing this. If you're manufacturing something, you can say, I plan on making and selling 20 of whatever it is. So you explain. And I know, especially in the restaurant industry, and even retail, you might have numerous items, but it's kind of breaking it down. Um, my background is restaurants, so that's why I always go to restaurants. But how many breakfasts are you going to sell? Are you open for lunch? How many lunches? What's the average price? So if you decide that your average price in your little coffee shop, and I'm going to do, none of this is real numbers today. It's all, I'm going to say my average meal is $10, and I'm going to sell 20 of them in a day. Then that's how you start get your daily sales, then get your weekly sales, and then get your monthly sales. And like I said, it's an educated guess. And then look at each month. If your business, do you think so I'm a little coffee shop in the community of, I'm going to use the community here in our Sage Hill region of Waka. The lake is right outside. So maybe they get more lake traffic. in the summertime. So then maybe you might decide that January, February, March, April, you're going to do the same sort of sales, but for June, July, and August, when there's lots of vacationers around, you're going to put your sales up. So that's how you're making your educated guesses to come up with your sales. You may also have 2 or 3 categories. I've kept this simple, but you may want to add 2 or 3 sales categories. You might have, if you're a convenience store, you sell gas, you might want to keep that really high ticket item. You might have a line that says gas sales, and then you estimate what your sales are going to be. You might have convenience grocery. Keep it simple. You don't have to break it out into 20, but you may want to put 2 or 3 different things in there. That's up to you. These spreadsheets, or you can change the columns, you can do whatever. But that's kind of how you come up with your sales. So I'm going to say, is there any questions on the sales part? I don't have my chat open. Okay, if not, we'll go on to cost of goods. Cost of goods is more in your retail and in your food sales. If you're a service business, you likely won't have anything. This is where you put the stuff you buy to do your business. So if in a case of a restaurant, this is the inventory that you buy. It's all the food items, everything that you buy to put that meal on the table or as takeout. And the reason I say takeout containers, anything like that, all the cost that it takes you to get that product plus the freight to get that product. So if you're let's say you're a handcrafter and you're making beaded earrings. So all the beads that you buy, any supplies that you buy to make those products, they would be go in here. So for instance, I'm saying if I had $3,000 worth of sales in a month, I would have, and usually the book is your food cost should be 33%. So I've just kind of, I should have $1,000 worth of inventory cost to make this $3,000. So if you were doing earrings and you're going to sell 15 pair at, you know, $30 and they cost you $10 a pair, your cost might be $200. So what is your cost to make that product that you're going to sell? So that's why this is called cost of goods and the freight. So that's what you're paying out each month for the product to make it. If you're a service business, if you're a consultant, you wouldn't have anything in that category. So those would just be left blank. So that's kind of the first ones. Now comes the big part. Figuring out your expenses. What's going to flow out? And this is where it kind of comes that you need to start doing a little bit of research. And maybe where I'm going to first thing is advertising. It's breaking all the expenses. And as your business, you may not have some of these expenses. You've got to decide if you're a home-based business, your expenses will be a little different. The example I'm doing today is somebody's got a building. So they've got all of the expenses that go with the building. So advertising, and I put in the startup cost. So maybe you need to get a sign on your building when you start. Or maybe you want to get some business cards, or you want to get some flyers posted, and you want to get that all done before. So that would be a startup cost. So I put that in the startup cost. I've got in the startup cost capital purchases. Maybe this little place I'm renting, I need to buy some equipment. So I've put my startup costs in there. And if you'll see up above, I put my loan proceeds was the $10,000. And here, because most times when you're borrowing money, it's for something specific. So I put there's my capital purchases. I'm going to do that before I even start. Professional fees, I put in here a little bit of a startup. You might have to get a business license in the community that you're in. Or maybe you need some kind of a license, depending on the type of business you're in. You might have to get some kind of a license, or you may need a lawyer to do your lease agreement. Or if you were purchasing a building, You might have a lawyer. So when are those fees? Are those fees coming now? Do you have to pay them before you start? Or is it 3 months down the road, you're going to get an invoice? So when is it going to come due? Um, in here, I'm pretending in my business that I'm renting this space. So I needed the first month's rent and I needed a damage deposit. So I needed that money up front. So I put that in there as an expense. I put in, sometimes if you've never gotten utilities or a phone before, you might have to put down a deposit. Besides paying your monthly, I know my husband and I own the lumber yard here, and when we bought it, we'd had a personal Sask Power and Sask Energy account, but we never had a business one, so we had to put down a deposit. So that had to come up front before we started. So that's the kind of things when you're starting. What expenses do you have to put out before you've even opened the door? And that's lots of times you'll start with that, and that you'll see used up a lot of the owner's money that they injected, and it also used up your loan money. Now you need to break out your monthly expenses. And this is again a cash flow. So when are you paying? When is it happening? And I always like to go, we'll go to one that's obvious. Where are we gonna go down to? I'll just follow down in order. So advertising, talked about that. So then as a new business, think about your advertising. What are you going to do? Are you going to be paying something out? Are you going to be doing flyers? Are you going to be maybe some promotion? Here we get hit up by the local hockey teams. Their tournaments. Are you going to sponsor, give a donation? So, it's looking at what month. So I didn't sit in this business. I can't afford to do something every month. So I've put $50 every second month. And that might be lots, or you maybe are going to put a sign out on the road. What does it cost? It means actually talking to the billboard company, finding what it costs for the monthly costs, and then, excuse me, and you can put it in. Automotive. Are you using your vehicle for your business? Like I said, this small restaurant, I got to go for groceries. I'm getting some delivered, but I figure I'm going to have to go in my planning. I'm going to make one trip maybe to Saskatoon to the wholesale club. So I put $100 in for my vehicle. What do I think I'm going to need for automotive? Bank charges. This is one where I always have to have a chat with business owners. They say, "Oh, my bank charges are $25 a month." Good. You'd put that in every month. Are you having a debit machine? Are you having are you accepting credit cards and that? That's one that caught us. My husband and I, when we got our debit card machine and we put it in our bank charges, we got our first bank statement, and here the bank had taken out all the fees for your debit card and Visas and MasterCards. Some months in our business, it's like $1,000. So, because every card charges a different fee. I love when someone pays with their debit card because I think the new one, I think a debit card fee is like 5 cents a transaction, but you pay for every debit credit card. So I really suggest do your homework around that. Most people want to use plastic, but it costs you as a business owner to have it. So do some homework and check out the different options and find out what those fees are, because this is the number one line I would bet that most business owners get caught on. They'll put their bank service charges $35 or whatever, but when they actually, and most of the debit cards, they all the money goes in, but at the end of the month or the beginning of the next month, they take out all the fees. So I've got on my bank statement about 5 different charges. I get a charge for the debit cards, I get a charge for MasterCard, I get a charge for Visa. So you have to add that up, and that's what your costs are for offering that service. So this is a line you need to do some homework on. And then,
There is a question, Jenny. Just sorry to
okay,
interrupt
yeah.
you. Gloria just asked, she said, sorry, I missed the vehicle costs.
Okay, vehicle costs, I was going to come back to that too, but vehicle costs in this case, I'm saying I'm using my personal vehicle and I'm just putting $100. But I should maybe expand on that. The vehicle charge is one place where the CRA really checks up on. We always suggest if you're using your personal vehicle for your business to put a logbook in your vehicle and keep track of when you're using it, whichever you think is more. If you think your vehicle you're going to drive your vehicle more for your business, then keep track every time you use it. Because what happens is once you get a year's log, and this is going to be tough. This is one place here you're kind of trying to guess. So we always say to a business owner, how often do you think? Are you going to use it more personal or are you going to use it more for business? And if someone says, business, estimate. Do you think it's 50% you're going to use it for your business? Then because it becomes a bookkeeping entry at the end of the year. You keep track of that kilometers, and at the end of the year, you might say, I put 10,000 kilometers on my vehicle and 5,000 of them were business. Then you know that half of all of your business, all of your expenses for your vehicle become a business expense. But for your purpose here, we're projecting, you haven't started. So we like people to kind of sit down and think how much you're going to use your vehicle and then estimate what you think it would be as your expenses. I lots of times tell people keep a separate little spreadsheet where you keep track of every time you put fuel in, every time you put change the tires or change the oil, because at the end of the year, when your accountant actually does and goes to make your income and expense statement, they're going to take that log, if it's 50%, they're going to take 50% of those expenses and actually put them in as a business expense. But we have to remember here, we're projecting. So you want to try to figure out what you think you're going to use your vehicle for. If you're a plumber and you're driving to all the job sites, your line is going to be very high here. You might have $500 or $600 as business expense, but you'll kind of know what your vehicle uses, what your kilometer, like how much a kilometer it costs you to use your vehicle, and then you'd put not a guess, but you'd put an estimate in of what your vehicle expense is. So does that help?
Also, you said I was thinking that I would be using completely towards my business. That I would be using completely towards my business.
Oh, using your vehicle completely? If you think everything for your vehicle, then you would be putting all those expenses. I'll use the example of us again. My husband and I are actually incorporated, and the vehicle that we own for the business is actually a business vehicle. So everything that we do for that business that vehicle is expensed. We actually even lease the vehicle, and that whole lease becomes a business expense. And so if I was doing my projections right now, I know what that lease is. So I would be able to put that lease expense plus gas. I could estimate, I would be able to put in what I think every month is. But you should still keep a log in that vehicle, because sometimes they'll ask you about that. That whole vehicle thing is huge. It is one of the things that the CRA checks the most. So it's really sitting down when you first start to do these projections, decide how much you need a vehicle and how you're going to treat it. Is it going to be a business? If it's completely for your business, then that actually goes on there and you would say you own the vehicle and this is what the expenses are for it. Okay, does that help? Okay, so that's the bank charges. Capital expenses, you might only have capital expenses at the beginning, but this is also when we start out as a business owner, you might have that wish list of equipment that you want. Let's say this little coffee shop starts, but then they decide down the road they want to buy an espresso machine, and they might decide they want to be in business 6 months, and on the 7th month they put in another expense for espresso machine, and I have no idea what one is. I'm going to say maybe you decide you want to spend $5,000. So you could put that in there as $5,000. And I'm just going to do that. And then you can see if your cash flow does it. Lots of times people will then look historically back at their cash flows and see what's up and down, and that'll help you make that decision if you can buy something. That's why the cash flow is so important, because it will help you make business decisions as you move along. Insurance. This is one of those things that you can decide if you're going to pay monthly, pay quarterly, or pay yearly. So that's something we always say, talk with your insurance agent. They will give you quotes on property and liability. That's part of the things when we talked in the business plan. Same thing here. Then you know when you come back, if they came back and you decided I can do this yearly, then you'd put in what month it's due. I've decided for this business that I'm going to do it monthly, but you may decide that you're going to do it quarterly. Then you just put it in on the quarters when it's due, when you're going to make that payment. Loan payment. In this case, this is where you put in the principal and the interest, because that money is flowing out of your business. Again, different than an income and expense statement or a profit and loss statement. There, you're only showing what's being expensed, which would be the interest. But in the case of this cash flow, cash in and out, that payment going out. So you want to make sure you find out. I did a calculation on $10,000. We have a loan calculator. So I put it in and it gave me amount. And this was over 3 years on $10,000 at 7.45. It told me that my payment would be $350 a month. So, and your bank will give you those kind of numbers. If you ask, different options, they'll be able to give that so that you can get it into your cash flow so that it shows up. Office supplies. We're all going to need, doesn't matter what kind of a business, depending on your business. This is a little restaurant. So this might be things like till tape and, just little things that you need for the office. So I started out in the beginning, the first month buying more, and then every couple of months spending $20. So it's sitting down, figuring out what you're going to need, and then go from there. Professional fees, again, could be your business license, could be, depending on your business, you might have to an association fee that you have to pay, and maybe it's due always in March, so then you just go in and put it in that month. Professional fees could also be the bookkeeper or an accountant to do your taxes. Maybe you're going to do all your books, but at the end of the year, you're going to take them to the accountant. There's actually a line for legal and accountant. And I did that, I think, up here. I did in I jumped over legal and accountants, but so I put in $200 for legal, and then I put $500 at the end of the year because I'm going to take my books to somebody and get them to actually do the tax return. So again, talking to the accountant, finding out what the charge is going to be. So that's, it's breaking each thing down, deciding if you have an expense that fits in there, and then doing some homework. As a new business owner, it's sometimes maybe doing some research, or if you're buying an existing business, you might be able to get their financials. If you can get their financials, especially around the area that we're coming up to, like utilities, sometimes it's hard to get an estimate of what the utilities might be for. But anyway, that's professional fees, looking at those types of things. Property taxes. In the case of this scenario, it's a leased, they're renting it, so there'd be no property taxes. But if you're purchased your building and you've got property taxes, is there an incentive? If you pay by August 1st, so will you pay it all in August? I know here in our community, we can split it up by 12 and pay each month. So it's deciding how you can do it. I put in here rent of $500. Building maintenance repair. You never know. So this is where you might, since I was renting, I didn't put anything in, but I put in under equipment. I put $100 in a couple of times. Again, depending on your building, depending on the state of your equipment, you might want to budget for, if you don't have to use it, good. But if you need it, it's built into your budget. Shop supplies. This depends on your business. I looked at this as my cleaning supplies for this business. Every business is different. And like I said, you can change these categories. Feel free to go in and change them, but it's what works for you. Telephone. What's your telephone expense? Internet. Are you going to have internet in your building? Um, do you use a cell phone for your business? So looking at what those monthly costs would be. Same with utilities. I put in here, like I said, a fee to get started. I just put some numbers in, but it might be talking to if you're renting a building and the utilities are you have to pay the utilities. The landlord should be able to give you roughly what the utilities are so that you can budget what your in and out will be. Um, Wages. Depends if you're hiring somebody. If you're just by yourself, if you're a sole proprietor, you wouldn't have anything in there because we'll talk about that in the next line. But wages, I estimated somebody over lunch every day, at minimum wage. And you have to remember that, there's the employer's part, like the EI and the CPP and workers' comp. You have to take that all into account. And what months? As my sales got more, do you need more staff? So looking at your wages. And then one of the last things that we always say is the owner's draw. If you're a sole proprietor, you actually it doesn't show as wages, it would show as an owner's draw. And I know as somebody in the financing, we always think you're going into business, so you should be taking something out of the business. Maybe not as much at first, but maybe as the business grows. So I started here taking $500 each month, and then I upped it to 1,000, and I think I might have left it at 1,000. But then what happens when you get all of these numbers in, you show what you've brought in and what you've taken out. Then all of a sudden you can see, okay, my first month, I didn't make enough to cover. So I'm a little bit cash short. Then you go into the next month, but these were the months where I had said my sales were lower. So you can start seeing where your sales need to be to cover all of your expenses. And that's why I said a financing, if a bank or a credit union or a community futures office will look at this cash flow because it's showing the cash moving in and the cash moving out. And you're going to have some months where you may not have enough, but you maybe had surplus from the other month. And this becomes a really great tool. We always tell business owners, don't put it on the shelf. And I mentioned that before, because now you can look at it, you can say, so for instance, maybe you projected
Hey.
the Did someone have a question?
No, I just
Okay.
muted.
Okay. You made all of a sudden decide when you actually look at what happened, maybe in month 3, you only had $3,000 worth of sales. Then you start looking what happened? Why did that happen? What do I need to do? Do I need to increase my marketing? Was there something going on in the community that took away from my sales? So that you can start planning for the ups and the downs, but also for expanding. Like I said, maybe you need to buy a new cooler. You need to buy something. You can start seeing when your cash flow is because you never want to drop yourself so you're cash poor so that you can't meet your fixed expenses. Um, that is a really quick overview of what the cash flow statement is. The big things to remember, it's the cash in, the cash out. Projecting, I always say it's a little bit like rubbing a crystal ball, but when people are getting into an industry, you usually have a very good understanding. And usually most can sit down and tell what they plan to sell and how many they'll sell. And don't be scared I'm going to go back up to the cash flow part, or like your sales coming in. Really sitting down and looking at how many you honestly think you're going to sell in a day. And you'll be surprised how quickly it does add up. And doing some costing. The big thing is I'm going to use, and I'm going to use an example. We had a lady that made beautiful beaded earrings and she was selling lots of them. But when we actually sat down with her and we costed out all of the material and put a value on her labor, she wasn't making anything at the price she was selling. So she realized after costing them out that and what money she needed to cover her cost of goods, she had to actually put the price of her earrings up. So doing that costing is is it'll help you there, but it will also help you in projecting your cash sales. And same thing, example for a restaurant. If you're opening a coffee shop, I always use the example of a breakfast, 2 eggs, 3 pieces of bacon, and a toast. What does it cost you to put that on? What is a dozen eggs? What's each egg cost? How many slices of bacon in a pound? And I know this sounds tedious, but if you do it on a few of your plated items, it will get you what it costs you for a breakfast. And now you can say, I'm open 5 days a week for breakfast, and I'm going to sell 5 breakfasts a morning times 20 mornings. All of a sudden, you've got a number that when you sit down in front of the bank, you can say, this is how I came up, and they'll go, oh, that's really reasonable. And it now becomes a very educated guess on how you got your numbers. And it's the same thing around your expenses. It's making those phone calls. People will give you quotes. Insurance. You don't have to buy from them, but if you ask them, they'll give you to somebody that's in a commercial division. They'll give you a quote, and then you can decide, you can ask, can I make monthly payments? And they'll give you all those numbers that then you can then punch into your income statement or into your cash flow statement. I'm going to stop there. I've been yapping for half an hour. Is there any questions?
So I just want to go back to Gloria. There was one last comment she
Oh,
had
yes.
mentioned, just that her vehicle is paid off. Maybe just touch on if that's the case.
If your vehicle would be paid off, you would still have the expenses for that vehicle. You would still have the gas. You'd still keep track of the, oil changes. You'd keep track of, tire changes, any maintenance that you do on your vehicle. For now, if you're going to use it 100%, then under automotive, you would put all your gas, everything in there per month. So if you know on the average that you say, and I don't know the numbers, but I'm just going to say you know that you spend $200 on gas a month, and you do an oil change every 4th month, and it's $100. So you would, $200 each month. The month that you do an oil change, you'd add that in. Um, Maybe you do tires every 2nd year, and I'm actually going to talk about that here too. Maybe it's year 2, you need to put tires on and you buy that on a certain time. You can put all those expenses in if that vehicle is 100% for the business. If it's not, I would suggest keeping a separate little spreadsheet where you just put all of your expenses in, that you can have a total. You know your total expenses for your vehicle at the end of the year was $5,000. And then you go back to that kilometer log and you look at your kilometer log, and it now tells you that you used your vehicle for 60% of the time was for your business. You then your accountant will take 60% times those expenses, and that will become your expense on your income and expense statement. For the cash flow purposes, you might then just take that number and divide it over the 12 months, because, to be honest about it, the 12 months can be that way. I'm gonna mute for 1 second. I just really, really need to blow my nose. I'm so sorry. All right, there we go. I am also just going to scroll down before I stop. Lots of times when you do a cash flow, they're going to ask you for 2 or 3 years. And once you've got your first year, and if you've done all your homework and you've got all that, this spreadsheet that we use in the Community Futures office actually has a thing at the bottom that says, okay, after year 1, what do you think year 2? Do you think you can increase your sales? And I said here, okay, just for an example, I said, yeah, I'm going to increase my sales by 10% in my next year. And my expenses, Well, there's inflation, things are gonna go up. Hopefully I've learned where I can maybe cut some of my expenses. So I'm gonna increase my expenses by 5%. Now, when you put that in here, and if you look at the bottom, there's year 2. So now when I go to year 2, it's now added 10% to all my sales, and it's added 5% to all of my expenses. Um, so then you can actually see what would happen if you had a growth and what happens through the time. And it also takes out the startup column. This new one now is just your 12 months and it's added. And you can do the same thing for year 3. At the end of this year, if I say next year I'm going to have a 2% increase, but I think my expenses are probably let's just say they're going to be, I know something's coming down the road. I could do 5%. And now when I go in here and I go to year 3, it's now done that too. It's added 2% to everything. And this is also where you can start playing and saying, okay, I know by year 2 that I need to replace a certain piece of equipment and I'm going to need it to do it here. And I can actually go, oh, maybe this one doesn't let me. But you can then start looking and seeing if it's something by looking at the end of your cash, if it's something that you think you need to do, or is it something that you maybe need to talk with a bank to get a loan, because sometimes like your cash flow, you don't want to make yourself cash poor. And that might be where you, by studying your cash flow, your highs and lows, you might be able then to go to the bank and get a small loan depending on what the piece of equipment is. Like I said, the big thing is just looking at each expense that you think for your business. And on this, we try to hit all the categories. Some of them are maybe very general, but some of them will fit you. And there's always room for others. You might have something else that is only pertains to your business. Um, don't be scared to add another column. That's why the nice part about the spreadsheets is that you can add whatever you need to add, um, and you can play in this. I also say do scenarios. Do one, and then copy it, save it, and maybe look at tweaking something. Maybe you decide you've got 2 options on. This happens lots. One is I got 2 different places to rent. The rent is different deals. Do one with one set of rent and do one with the second set of rent. A lot of your expenses might be the same, but maybe the rent is $250 more in one place. Maybe one includes the utilities and the other one doesn't. So by doing the scenarios, you've now got a spreadsheet in front of you that you can start doing comparisons. And there. So.
Yeah, I mean, I think that's great, Jenny. I think too, some of the different like systems are different prices, as you mentioned. Banks are different pricing per transactions. I mean, I remember one, I was like, why am I still getting these printed out bank statements that I recycle? Like, I'm paying for this. I need to actually sit down and stop that from arriving.
Yep.
There's little things. And just on another side, my husband and I have a mobile hot dog cart, and we thought, oh, we didn't overly sit down and do this before we started moving along. Next thing you knew, we had piles of money racked up on our credit card because we just thought, oh, we'll just use the card. We had cash, but we were going over, and then we were going over and we were using the credit card. So we were very fortunate. Like, I approached Sage Hill for a loan, and I mean, it was way smarter to go that route and get a loan versus having a really high interest credit card. So you have to, yes, sometimes it's like, do you not? But I mean, when you're looking at the interest alone, it's way better to not be using credit for things like this.
And that's where this cash flow can actually come in and show you where you could work that bank loan at one interest rate, and you look at your credit card at another interest rate, and then you can soon see what your differences are. It looks like, I always tell people, break it down in little steps. It looks over, like I always print it off, and it's daunting. But if you break it down by the day, by the month, And even when you go to your expenses, each different expense, do I have this? Will I do anything in this category? And if you are, break it down by the month. And if you've got a yearly expense, that's fine because some things will come yearly. But checking out, can my business take um, a large payment once a year? Yes or no? And that's where this will help you determine when you can and can't do those things. That's the biggest part is and using it. Don't be scared to. I always in the office here, I'm known as the spreadsheet junkie. I think there should be a spreadsheet for everything. And I know it's not everybody's thing, but you could also have a spreadsheet running with your actuals or your statement, from your bookkeeping statement. So you can kind of compare and see where things are kind of going amiss. And it doesn't hurt to sit down and look at these sometimes and say, oh, I need to spend some money on marketing. Like, can I do it? And finding you might be able to do something in a local newsletter for $25 a month by doing a little business card, and that might be what you need to do. But by looking at this, you can see, yeah, I could do that monthly expense. um, so it helps you break that out. But
Mhm.
again, and it forms that big picture. You also have to remember when you go for financing that they don't know you, they don't know your business, and this is telling your story.
Mhm.
um, Having the notebook with your, and even around your expenses, how you came up with them, just little notes of what you've done. Um, we've had some really techie people that, use the spreadsheet and actually do the little boxes and the little
Mm.
balloons that come up with the little. If you're into that, do it. If you're not, I am all for a. I had one lady come in and she just had a scribbler. She had it all wrote down. She had her flour costed to the cup. She could tell me what a cup of sugar was worth. She knew what every recipe was worth, but she had it all in her scribbler. So whatever works for everybody. If you're not a computer person, you can do this with a piece of paper. We'll, print it out and just start penciling your numbers in. It's just breaking those expenses out so that you don't have a surprise in the end.
And I think too, Jenny, it's hard because of a lot of small business owners, um, this is the parts that they struggle with. They might be quite creative and big picture, and they're the worker bees and all these things. And, we get excited about, oh, we got to grow, grow, grow. But it's really important to have this kind of down pat before you decide that you're going to take on something else and expand, because you need to see if you can actually afford it. And if you can't sit down and do this alone, like Sage Hill will help you, other community futures offices will help you. Maybe you have a friend that's very good just with sitting down and attention to detail and helping you kind of navigate this. But I would highly recommend that you just have another set of eyes. Just just have a look with you and challenge you on some of these things, because two brains often are better than one.
We always say, and that, I guess I didn't say in the beginning, as a community futures office, there's 13 of us across the province. We all deal with small businesses, and this is what we do every day, is helping people put their numbers so that they make sense. We don't want to do them for you, but we'll definitely give you the resources and that second set of eyes to, just walking you through. I know the one day somebody was in here and I asked them if they thought about liability insurance. They hadn't even thought about it. And unfortunately, it is part that's coming here. So, getting that quote, figuring out what it's going to cost you, and working it into your projections. So, like I said, I hope this sheet it's a template. Feel free to navigate it, to change it, to make it fit. But it is whether you're starting or you're existing. Putting your numbers as an existing business in is great. It gives you an idea. Or if you're buying an existing business, we always say take the expenses. They'll give you their income and expense, even if you simply divide it by 12 and punch it into the categories. Pretty soon you'll see where the highs and lows are, where you might have some areas that you need to rethink or do something different. It shows a really great picture of what's happening. Does anybody have any other questions?
Well, on February 4th, we have everything about buying versus starting a business. That is a great session. We have had it before. definitely covers a lot of things. February 18th, CRA in your small business. March 4th, CRA in your incorporated business are some of the upcoming workshops we have, and I'll be sure to send out this recording as well as a link to all of our upcoming sessions. So if there are no questions, thank you very much for coming. Oh,
Yes.
thank you. Thanks, Deborah.
Anyway, thanks everybody. It was great. And if, like I said, if you have any questions, make sure you reach out to your Community Futures office.